A lot has happened in the SEC versus Ripple lawsuit as it approaches the 1-year milestone. In such a short period of time. Is the SEC going to make a deal? What has the SEC been up to lately? What is Ripple's reaction? So, watch this video until the finish to learn everything there is to know about the SEC versus Ripple court case. Hello there, guys. Welcome to Crypto Aussie, your daily resource for all things XRP. If you're new to the channel, be sure to give it a thumbs up, subscribe, and set on post alerts so you don't miss out on future videos. Let's go into the video now that that's out of the way. The case of Ripple versus SEC is critical because the stakes are so high. The decision of this lawsuit could have a significant impact on the future of cryptocurrencies in the United States and around the world. Numerous academics are concerned that many digital finance developments are occurring at the same time. Companies and their founders are not troubled by rules outside of the United States. As the fact discovery deadline approaches, the case is likely to have a rough week. Many documents have still to be discovered. Let's start with a quick recap of everything that has happened between the SEC and Ripple thus far. Ripple and the SEC have been at odds since the SEC filed a lawsuit against the cryptocurrency in December 2020. Ripple Labs alleged that by neglecting to register its XRP coin as a security measure, it had violated securities regulations. The move was one of the last made by Jay Clayton, the then SEC chair, before he stepped down. Following Joe Biden's presidential election victory over Donald Trump in 2020. Ripple had been using XRP as a vehicle to fund its main business of frictionless cross-border transactions for financial institutions since it was created in 2012, and it had been doing so for 8 years. Ripple was caught off guard by the lawsuit, which contributed to the already perplexing issue. Whether cryptocurrencies should be classified as securities, commodities, or something else is the subject of regulatory debate. Ripple believes XRP isn't a security, thus it doesn't need the SEC's approval to operate. Furthermore, the SEC already enables other cryptocurrencies, such as Bitcoin and Ethereum, to be traded as commodities. The blockchain networks of these cryptocurrencies aren't required to register as security, according to the report. So, how has the Securities and Exchange Commission reacted to this? The SEC claims that Ripple is unique since XRP was actively utilized to fund Ripple's business and is effectively an investment in the company. According to court precedent known as the Howey test, it is a security, not a commodity, and falls under the SEC's regulatory authority. The litigation, which is currently in court, has been devastating to Ripple's XRP, which has lost value due to more than 50 exchanges. Ripple's local operations have largely stagnated, and the company currently relies solely on its international operations. For a large portion of its revenue, the company relies on the market. Despite its financial difficulties, Ripple is not giving up. While the SEC asserts frequently in filings and hearings that the SEC is not on trial, it is almost apparent that the reverse is true. The case has proven that past SEC leaders prioritized personal benefit over the nation's well-being. Let us now turn our attention to Gary Gensler. The case against Ripple will be a major litmus test for Gary Gensler, President Biden's nominee to lead the commission. During his tenure, Gensler has pledged to make regulating the burgeoning Bitcoin industry a key focus. Clayton is a formalized paraphrasing of his predecessor, and he has been more of an activist in the crypto area than his predecessor. Gensler, who testified before the Senate Banking Committee, disclosed that the SEC is considering expanding its control over the crypto market by requesting further regulatory authority from Congress. This might be bad news for Ripple and, by extension, for the future of e-commerce innovation. If Gensler gets his way, skeptics believe the crypto space would become claustrophobic. XRP is a cryptocurrency that has been openly and actively traded in a large secondary market for more than a year. The volume of XRP trading is reaching 2 billion at the time of producing this video. A dollar symbol. Experts are afraid that the SEC may wake up at any time and say, well, we think this asset is security, on an asset that has been widely adopted and traded globally. It requires a whole new approach. Analysts in the United States are afraid that if the agency continues to function in this manner, it would stifle digital finance innovation. Since the SEC hammered Ripple with the lawsuit, many financial partnerships and bodies have been hesitant to deal with Ripple and the XRP token. Coinbase refused to offer the XRP coin on its exchange platform because the situation had gotten so bad. Other contentious meme coins are still on the list. Remember that XRP is now the world's third largest cryptocurrency by market capitalization. Coinbase revealed shortly after the SEC Ripple case that it was canceling plans to create a crypto lending scheme. The company gave in to concerns from the Securities and Exchange Commission that it would face its own lawsuit if it went ahead with a scheme that would allow clients to earn interest on a stable investment by lending it to other dealers. A stablecoin is a crypto asset that is linked to a well-known currency such as the dollar. According to the SEC, the program would be considered security and hence would need to be regulated as a financial instrument. The news comes only 2 weeks after Coinbase's CEO went on a Twitter rant, claiming that the SEC was not being clear about its policies and refusing to meet with the business to provide clarification. Other crypto corporations may begin to modify their digital payment methods as the lines get more blurred. Businesses in other countries have a more lenient approach towards cryptocurrency. While there is significant concern about what the SEC may do in the wake of the Ripple case, Ripple is not backing down and is prepared to continue throwing punches until the very end. The corporation has made the lawsuit highly public and has stated that they would not settle outside of court. Even as both parties' deadlines approach, motions continue to fly from beginning to finish. In a video, Jeremy Hogan, an XRP supporter, expressed surprise that 2 huge motions were brought so late in the discovery process. The first motion demanded that Ripple produce internal Slack discussions, while the second demanded that the SEC release internal memos. The lawyer spent time analyzing the motions in terms of each party's strategy for the lawsuit. What's fascinating about these 2 motions is that they demonstrate the parties' differing perspectives on the subject. Ripple's legal team has assured the news source that there are no plans to settle its litigation with the SEC, according to a tweet from Charles Gasparino of the Fox Business Network. They're certain they can show Gary Gensler that pursuing the case is picking winners and losers in the #crypto business at the expense of innovation, the team says. Gary Gensler's camp responded to Gasparino's tweet with another. Gensler is the current chair of the Securities and Exchange Commission, and he has been leading the investigation into Ripple. People who know Gary Gensler think the chances of his yielding power or cooperating to engage the #crypto business in a new regulatory regime are close to zero, according to the tweet. According to Gasparino, the chairman will most likely try to use the SEC's power, unless Congress or the courts intervene, says the author. According to whispers on the inside, the SEC has been taking depositions without the papers. And that is usually a mistake, especially in sports, Gasparino said, since it needs to thoroughly establish its argument. You are unlikely to get a second chance at the deponent in federal court. Concerning the SEC, which is attempting to establish that XRP was offered as an investment, contract, and hence a security, the company has decided to keep away from XRP's technical concerns. Things include the ledger's architecture, its decentralized nature, and a slew of other factors. These, according to Gasparino, are losing arguments for the SEC. Instead, the SEC will strike from a marketing standpoint, Gasparino stated. Ripple is accused of marketing XRP as a security, treating it as if it were a piece of stock, attempting to influence the XRP price, and so on. This is a flank attack, and it isn't the strongest argument, but it could be the only one. The Securities and Exchange Commission has. As previously stated, the agency has requested that a number of Ripple workers, including 3 core members of Ripple's marketing team, a member of Ripple's XRP market team, and members of Ripple's finance team, produce Slack messages. What role does the marketing team play in determining whether or not XRP is a security? Not a single thing. They do, however, have everything to do with how Ripple advertised and treated XRP, which accounts for nearly a third of the whole market cap. The SEC's overall inquiries are connected to Ripple's marketing efforts or effect on the XRP market. Ripple Laboratories, on the other hand, regularly matches the SEC blow for blow with each passing second. That was over. Discovery, has confirmed that during much of the same period, Market participants and the SEC itself were still uncertain about whether or not digital assets generally, and XRP specifically, should be subject to regulation under the federal securities laws, said Ripple counsel Matt Solomon in the most recent motion. Meanwhile, securities experts agree that the Ripple litigation will serve as a model for how digital currency will be characterized in the future, including whether it will be handled similarly to a stock. Disclaimer: prices may have changed since making this video. We are not a licensed financial advisor. All videos on this channel are intended for entertainment purposes only. You should not buy, sell, trade, or invest in any asset based on what we say in these videos. You should know that investing carries extreme risks. You could lose your entire investment. This is not trading advice, and we are in no way liable for any losses incurred. Beware of scammers. We will never ask you for money over WhatsApp or any other service. Do not click on anything, comments, or emails that pretend to be from US. Please report all scams and imposters to YouTube.